Hello everybody, I would like to do a presentation tonight with a banking law with the topic comparison of the handling of failed banks in the Bank Indonesian Act, LPS and Law number 4 of 20 and 23. First of all, I want to introduce myself. My name is Andela Putraisha. I'm from Andalas University. First slide is background. Realistically, the failure of a bank must be made into a measurable and rational risk. This means that from the start it must be realized that the chance of a bank failing must be taken into account no matter how small the chance is. In this way, it is possible to reserve the source of funds so that the handling of failed banks becomes more well organized and accountable. And the next slide, why LPS was built by government. So this is the reason. Of course, it is difficult for all parties to accept that in the APBN a certain amount of reserve funds will be allocated to deal with failing banks. Therefore, a special approach and treatment is needed by a special institution as well. We are grateful that in the end we have a Deposit Insurance Corporation, or we can call it LPS, which has been operating since September 22, 2005. The existence of the LPS has been understood to only carry out the function of guaranteeing the deposit of people who save at the bank. There are still many who don't know that one of the strategic tasks of LPS outside of deposit insurance is handling failed banks and carrying out the process and settlement of bank liquidation. How LPS do their due? 1. The failed bank that LPS will handle are failed banks with systemic and non-systemic impacts. The definition of systemic is when a bank failure will have an extraordinary impact both in the withdrawal of funds and on the smoothness and sustainability of the economy, while those that are not systemic, of course, if they do not meet the criteria mentioned above. 2. In dealing with systemic or non-systemic failed banks, LPS will conduct a study and decide whether to save or not. If the cost of saving is much more expensive than liquidating, then the solution is short. It is proposed that the bank business license be revoked, then liquidated and the LPS pay claims on public deposits. And the third, if the LPS decides to rescue, then there is a difference in treatment between systemic and non-systemic failed bank rescue. For non-systemic failed banks, the rescue does not involve all shareholders. This means that all costs incurred for rescue will be provided by LPS. Next, for systemic failed banks, this can be done either without involving all shareholders or by involving all shareholders. In the event that all shareholders will be involved in the rescue, they are required to deposit a minimum of 20% of the total cost of the rescue. Just as a bank fails systemically, LPS will handle the deficiencies. For handling failed banks with any scam, the LPS based on Law number 24/20 and 4 is given very adequate authority. The authority of the GMS and the management of the bank failed to be fully handed over to LPS so that the rescue program could be carried out more effectively. Included in the authority given to LPS is to make temporary investment, conduct mergers and consolidation with other banks. Next slide. Even if they are allowed to carry out rescue efforts, it does not mean that the bailout funds from LPS will disappear. All costs incurred as a result of rescuing a bank will be calculated as temporary investment. LPS investment period is limited and must sell back its shares a maximum of 2 until 3 years after the rescue is carried out. In the event that a bank ultimately has to be liquidated, the proceeds from the sale of liquidated bank assets will be distributed in priority to employee salary and severance pay, operational costs, and expenses incurred by LPS. If the proceeds from the sale of assets are still insufficient, then the remainder will remain the obligation of the all shareholders. The next one is from the scheme for dealing with failed banks by LPS as described above. It can be concluded that in the event of a systemic bank failure, there is a more definite and structured settlement mechanism. In addition, there are clear and firm sanctions against shareholders that result in the failure of the bank. This will certainly provide a more adequate protection for both the community and the government. Even so, it must be realized that the existence of the LPS has not been able to relieve the government's burden because if LPS ability, both in terms of capital, accumulated premiums and reserves and business surplus, is insufficient, then the government will still ask for the shortfall. If you see that there is such a possibility, LPS is indeed not a reliable savior. The next one is Indonesian Bank. Bank Indonesia, as a banking authority institution, supervises and checks the health condition of all banks in Indonesia. From the result of the bank soundness research conducted by BI, it can be seen about the condition of each bank in Indonesia, included in the categories and ratings given, where against banks that fall into the category of unhealthy and or unhealthy, BI will take action against the bank. The next one is kind of supervision. First one is normal supervision. The supervision is carried out on banks that meet the criteria, have no potential or endanger the continuity of their business. Generally, the frequency of supervision and monitoring of bank condition is carried out normally, while inspection of all types of banks are carried out periodically or at least once a year. Second one is intensive supervision. This intensive supervision is carried out on banks that meet or have potential difficulties that could endanger their business. Intensive supervision aims to prevent banks from being placed under special supervision. Banks that fall under this condition are listed in Article 2 PBI number 6/9/PBI/20 and 4. Intensive supervision aims to prevent banks from being placed under special supervision. In accordance with Article 2 of PBI number 6/9/PBI/20 and 4 concerning follow-up supervision and determination of bank statute, the banks included in this intensive supervision are banks that meet one or more of the following criteria. 1. Having unhealthy predicate in assessing the soundness of bank. 2. Have actual and or a potential problem based on assessment of the overall risk. What is meant by composite risk in an assessment based on a quarterly risk profile assessment with the result of an assessment having high or moderate risk with an increasing direction of risk. There is an accident and or violation of the maximum limit for extending credit, and according to BI assessment, the settlement steps proposed by the bank are considered unacceptable or impossible to achieve. 4. There was a violation of the net open position, and according to BI assessment, the settlement steps proposed by the bank were deemed unacceptable or impossible to achieve. 5. Have a minimum statutory reserve ratio in rupiah equal to or greater. And 6. Has fundamental profitability problems. 7. Has non-performing loans on a net basis of more than 5% of total loans. The next one, after assessing and determining that a bank is included in intensive supervision, BI will take several steps or follow-up action to determine the status of the bank. Steps carried out by Bank Indonesia for banks with intensive status among others. 1. Requesting the bank to report certain matters to Bank Indonesia. 2. Increase the frequency of updating and assessing plans work with adjustment to the goals to be achieved. The next one, asking the bank to prepare an action plan in accordance with the problem faced. BI will order the bank to make an action plan regarding corrective steps to be carried out by the bank and provide a time frame for carrying out the corrective plan that has been made by the bank. Bank must report to BI regarding the development of the bank is carrying out the action plan. Placing Bank Indonesia supervisor and or examiners at banks if necessary. For a bank under intensive supervision which does not result in an improvement in financial and managerial condition and based on analysis by Bank Indonesia, it is known that the bank can be classified as a bank having difficulties which could jeopardize its business continuity. Then the bank is then designated as a bank with special supervision status. The next one, special surveillance. Special surveillance is supervision carried out on banks that are considered to be experiencing difficulties that endanger the continuity of their business according to the specified criteria. Banks placed under special supervision according to Bank Indonesia assessment meet one of the following criteria. Have a minimum capital adequacy ratio or KPMM of less than 8%. KPPM is based on output. At this time, the term failed bank was not known, but what existed was a bank in restructuring. Bank under restructuring, hereinafter abbreviated as BDP, is a bank designated and handed over by BI to IBRA to carry out a restructuring program. Prior to the formation of the LPS, the procedure for settlement and handling of failed banks was divided into three, namely the pre-IBRA period, the period after the establishment of IBRA, and the period after the end of IBRA. First one, pre-IBRA period. Before the establishment of IBRA, prior to the formation of IBRA, settlement and handling of troubled banks was the authority of BI. So, if there is a problematic bank, it will be handled by BI. If BI has tried to make the bank healthy but still unsuccessful, BI will immediately revoke the license and liquidate the bank. This then further pushed down public confidence in our banks if at this time there was no guarantee program, so that there was a massive rush. 2. The establishment period of IBRA. The formation of IBRA is one of the important strategies in a series of steps taken by the government in its effort to improve national banking. In carrying out the restructuring program as formulated in PP number 17 of 1999, IBRA has the following tasks. 1. Bank restructuring determined and submitted by BI. 2. Settlement of bank assets, both physical assets and debtor liabilities, through the asset management unit. 3. Attempts to return state money that has been channeled to banks through asset settlement and restructuring. The next one is Law 4 of 2023. Law 4 of 2023, Article 6 is part of Chapter 3, namely Institution, wherein Part 2 discusses the Financial System Stability Committee or KKSK. The financial system is a unit consisting of financial service institution, financial markets, and financial infrastructure, including payment system, which interact in facilitating the collection of public funds and their allocation to support national economic activities, as well as corporation and household connected to financial service institution. Financial system stability is the condition of a financial system that functions effectively and efficiently and is able to survive turmoil originating from within the country and abroad. Financial system crisis is a condition where the financial system fails to carry out its function and roles effectively and efficiently, as indicated by the deteriorating economic and financial indicators. Law 4 of 2023, Article 6 changes 10 provision in Law number 9 of 2016 concerning prevention and management of financial system crisis. This law established the Financial System Stability Committee. The next one, what is the Financial System Stability Committee? Komite Stabilitas Sistem Keuangan menyelenggarakan pencegahan dan penanganan krisis sistem keuangan untuk melaksanakan kepentingan dan keamanan negara di bidang perekonomian. Komite Stabilitas Sistem Keuangan dibentuk berdasarkan undang-undang mengenai pencegahan dan penanganan krisis sistem keuangan. The Financial System Stability Committee consists of the Minister of Finance as the coordinator and concurrently a member with voting rights, Governor of Bank Indonesia as member with voting rights, Chairman of the Board of Commissioner of the Financial Services Authority as a member with voting rights, and Chairman of the Board of Commissioner of the Deposit Insurance Corporation as member with voting rights. Each member of the Financial System Stability Committee acts for and on behalf of the institution he leads in accordance with the provision of the laws and regulation. Just that I can say thank you for the attention.